Okay, so let's start today's class. Last time we asked you to practice the notes on page 37, right? So the notes on page 37 to 41. Maybe you finish it, maybe you're still working on it, right? But it's okay. If you finish, let me check, okay? So for your last practice, right here, we have one thing I want to tell you. That's why let's look at your note, page 37, okay? Your note on page 37, when we talk about the case, what's the case? Issue as premium, 溢价发行, right? So don't forget, what's your first step? Look at your promises, right? So what's your promises? After you understand what's your promises, then we use the promises to do what? To borrow money from creditors, right? So first thing, understand what are your promises. After that, then we should figure out how much money you could borrow from creditor, right? So don't forget how to get the amount. What's N? What's I? It's very important, right? What's N? 10. What's I? 4%. So based on N and I, then we know how much money we could borrow from creditors. Right here, right? Okay? So based on this, the first issue, how much money we could borrow from creditors. Then what's the next? Don't forget, the next, when we talk about liabilities, always you have to consider what? Interest, right? 小尾单, what are you doing? So based on the liabilities we have, the next is what's the interest, right? So what should we do? Use effective interest method to figure out our cost of borrowing, right? So we use effective interest method, 有效利率法. Then we could find out our first cost of borrowing. What's that? Contractual interest rate, 票面利率, right? So our first cost of borrowing, contractual interest rate, your promises will not be changed. So your promises, contractual interest rate will be the same for each period. So what's the next? You can figure out total cost of borrowing based on market interest rate. How much investors, creditors want, right? So based on market interest rate 4%, how much they want from you for the interest right here, right? Okay, then we could find out our second cost of borrowing right here because it's issue at premium, 溢价发行. So your second cost of borrowing right here will make what? Will make your liabilities decrease over years, right? So did you find out? Your liabilities right here will be decreased because of your second cost of borrowing. So did you find out? Your second cost of borrowing will make your liabilities decrease. Okay? So remember, our focus is on second cost of borrowing. Also, your second cost of borrowing will affect your liabilities, right? So issue as a premium, 溢价发行, your second cost of borrowing will make your liabilities decrease over years. In the end, don't forget, what's our liabilities at the maturity date? Always your promise. So what's your promise? Principal, okay? So don't forget this. Actually, I want to tell you this concept again. Why? Because later when we talk about new contents, how to get the answers for new contents, right here, don't forget, what's our effect of second cost of borrowing? Your effect of second cost of borrowing will affect your liabilities for each period. Okay, don't forget that. 听得懂吗 ，Elaine？ 第二个借贷成本，除了算出第二个借贷成本以外，很重要一个观念你一定要知道，就是第二个借贷成本会影响到你每一期负债的账面值。那所以每一期负债账面值多少，你要想一下第二个借贷成本 ，OK？ 所以溢价发行会让溢价发行第二个借贷成本会让你的账面值逐期减少，折价发行会让你的账面值逐期增加。OK? So this is a very important concept you have to understand. Because of second cost of borrowing, they will affect your liabilities. Okay? If you understand that, later we want to tell you new concept. But for the new concept, you have to figure out your liabilities at that moment. So how to get your liabilities at that moment? Don't forget how to get it right here. Okay? Okay. Any questions? So after you find out your cost of borrowing for each period, so what's our next? Don't forget, we use journal entry to record our each transactions, right? So your note 39, don't forget, first day, how much money you borrow? Okay, then we use debit credit to describe how much money you borrow from creditors, investors, okay? So what is the following periods? We have to record our first cost of borrowing, second cost of borrowing, right? So don't forget how to record your first cost of borrowing, contractual interest rate. Your second cost of borrowing, discount amortization, 折价摊销 or premium amortization, 溢价摊销 Okay? You could record these two separately or combine together. Either way, depends on you. Okay? So any questions? For your note, page 39, we record first cost of borrowing, second cost of borrowing. We record first cost of borrowing, second cost of borrowing. Okay? So how about next? Page 40. Don't forget, we pay interest on January 1st. So that's why January 1st, we pay only contractual interest rate. That's why $5,000. What's the second period? Don't forget, first cost of borrowing, second cost of borrowing, right? But here, we want to tell you, how about your maturity date, okay? So, always, some of you will forget, for maturity date, when you prepare your principal, don't forget, you still have to pay what? Interest for last time. So always some of you will forget it. When we pay principal, don't forget, you have to pay last interest, right? So last interest, don't forget, you have to pay it. So paid interest for last time. Always don't forget interest. When you have the liabilities, always you have to pay the interest. So after you pay the interest, then at the maturity day, we pay what? We pay principal, okay? After pay the interest, at the maturity day, we pay the money back to creditors, right? So you pay principal. Okay, any questions? So don't forget, always we have a last interest you need to pay. After last interest, you pay the debt, you pay the principal. No problem? Okay. So after all the process, don't forget, accounting, our purpose not journal entry. So what's our purpose? Financial statements, right? So after we use journal entries to record the process, our purpose is to get the financial statements. So here we want you to prepare financial statements for 2025. So what's your interest? Right here. Don't forget, interest expense is your total cost of borrowing. So what's your total cost of borrowing? Always market interest rate. Okay? When you look at financial statements, interest expense is your total cost of borrowing, 总借贷成本. So what's your total cost of borrowing? Market interest rate, okay? So how to get the number? You can look at the tables, right? So the tables, how much? Right here, go back to the tables, told you how much? 2025, so you could combine these two periods to get the interest for year 2025, right? Okay, so when you want to prepare financial statements, the easy way is look at the table. We'll tell you the answer, okay? Any questions? Then how about balance sheet? Bonds payable. What's your liability right now? Interest payable. You owe the interest. How much? Remember, interest payable. You owe the interest. How much? Each period, we only pay contractual interest rate. Okay? Each period, we only pay contractual interest rate. So contractual interest rate told you, you still owe it interest $5,000, okay? How about bonds payable, your liabilities? How much money you still owe to the creditor investors? You can look at the tables. Year 2025 told you what's your liability. Year 2025, the table told you how much, right here. So this is your liability for year 2025. So did you find out? When you want to prepare financial statements, you look at the tables, still you can get the answers you need. Okay, any questions? No problem? So this is the practice. We asked you to finish it last week, right? Okay. But here today, help you to review the practice. At the same time, don't forget, I want to tell you, don't forget here, second cost of borrowing. Second cost of borrowing will make your liabilities increase or decrease, right? Second cost of borrowing, when issued at discount, will make your liability increase. Second cost of borrowing, issued at premium, will make your liability decrease. Okay? Any questions? No problem? Okay. So based on this, I want to tell you new content today. So please go to note on page 161. Your slide, page 161. Okay? First issue, we've done already, right? So what's the first issue? How much money we could borrow from creditors? So you should know what's N, what's I, okay? After that, don't forget, liabilities, we have to discount. We have to discuss what? Interest, right? So interest payment is our first cost of borrowing. Interest payment is our first cost of borrowing. So our first cost of borrowing is what? Contractual interest rate. Don't forget, when we discuss first cost of borrowing, we have a second cost of borrowing, right? How to find out our second cost of borrowing? We want to find out our second cost of borrowing for each period. We use effective interest method 有效利率法。Okay, so that's the contents we've done already. Today, we want to discuss the last one. So what's the last one? Redemption date, 赎回日. So what's the redemption date, 赎回日? Someday, you had to pay the debt, right? When you pay the money back to the creditors on this day, then we had to figure out any transactions is your gain or your loss, okay? So the last issue I want to talk about is right here. On the last day, when we redeem, buy back our bonds, pay the debt to the investors, what should we do? Okay? No problem? Okay. So let's see how to do for the last issue. On your slide 162. So when your company retire bonds, retired, 退休. So retire means what? When you decide to buy back, make your bond invalid. So when your bond invalid,无效. Okay, so retire bond means your bond is invalid, useless. So what kind of situations your bond is invalid, useless? We have actually two simple situations. So first one is what? When you decide to buy back. Buy back the bond means what? You pay the money back to the creditors. When you pay the money back, you could get back your bond, right? Get back your promises. So your bond is invalid because when you pay the money back to investors, creditors, it's done for the liabilities, right? Okay. So your bond is invalid. The first situation is when you buy back your bond. Okay. Buy back means redeems. 赎回. So it means what? When you decide to pay debts, 还钱. Okay? So when you pay debt, pay the money back to the creditors, your bond is invalid, right? Okay? So this one is a simple situation. When we pay the liability back, when we pay the money back, then we don't have the liabilities anymore. Since you don't have the liabilities anymore, of course, your bond is invalid, okay? Second one, more complicated is what? Convertible bond. Remember what is convertible bond? 可转换公司债。Remember what is convertible bond? Your bond could convert into shares, right? So bondholder become shareholders, right? So that's why the bond is invalid because right now they got shares. Remember that? In case you forgot, it's on slide, page 40. 64. Slide 64. Remember? We mentioned it. Convertible bond, 可转换公司债. What does it mean? In the beginning, that's the bond, right? But investors have the right to convert the bond into shares, right? So after they've done this, your bond, of course, is invalid, right? 债券没有用了嘛 right? Why? Because they become shares. So this one, bond becomes shares. They will make your bond retired, invalid. Okay? So this is another situation. When we talk about retired bond, your bond is invalid. So if you, in case you forgot, you can go back to your slide, PPT, page 64. Okay, so this is two situations. You could retire your bond, make your bond invalid. First one, pay the money back, pay the debt. Second one, when investors decide to convert the bond into shares, okay? But don't worry, for our course, we will just tell you the first one, simple case. Second one is more complicated if you take intermediate accounting, 中会, then you will find out the second one, okay? So today, we will just discuss the first one. So the first one is, when we buy back the bond, redeem the bond, pay the debt. Any questions? So for the first one, buy back the bond, actually on your slide 163, when you decide to buy back the bond, pay the money back, when? We have two cases when you pay the money back. Simple case, I believe you already know what's that. You pay the money back at maturity date, okay? So first case is quite simple. When you pay the money back at the maturity date. So pay principal at the maturity date. But don't forget, at the beginning, I remind you that at the maturity date, not only pay principal, always you will forget what? Pay your interest for the last period, right? So at the maturity date, when you want to pay the money back, I mentioned at the beginning on your note, page 40. On your note, page 40, right here, at the maturity date, when you pay the principal, don't forget your interest for the last period. Always some of you will forget it, so don't forget it. So it's on your note 40 and your note 35. Your note 40 and your note 35, we mentioned this already. So when you decide to pay the money back at the maturity date, remember you had to pay 2 money. So what are these 2 money? First, pay interest for last period. Second one, pay your principal, right? If you want to double check it, you can look at your note on page 35 and page 40. So first case, pay the money back at the maturity date. How to do that? You already done it on your note 35 and your note 40. Any questions? No problem? Okay, so actually our focus is on your case 2. Sometimes you want to pay the money before maturity date. So when you decide to pay the money before maturity date, could you tell me, could you do that? You want to do that, could you do that? Huh? You can? How? Only when you issue what type of bond? Callable bond. Remember that? On your slide 65, your slide 65. Remember that. What kind of bond? You could pay the money before maturity date. Callable bond, 可赎回债券 okay? Only callable bond, 可赎回债券 you could pay the money back before maturity date, okay? Any questions? So it's on your slide, page 65. Told you that. So only callable bond, you could do that.可赎回债券 Okay, so for normal bond, could you do that? You cannot, okay? Only callable bond, you could do that. So what does it mean, callable bond? You issue the bond, but at the issue date, you make a deal with investors, creditors, to tell them you could do that, okay? So for the bond, the callable bond, remember, only callable bond, you could do that. So if this is callable bond, could you tell me, for the bond, for any bond, we have 4 basic promises. So what are these 4 basic promises you have? First is what? Principal, right? So first, I have principal. Second one, your promise. What kind of interest? Contractual interest rate. What's the third promise? Maturity date. When you should pay the money back. What's the last one? Interest payment date. When you should pay the interest. Okay? So these are 4 basic promises we have for normal bond. But when today is callable, what does it mean? We have an additional condition with investors. So what is the additional condition? You could pay the money back before maturity, okay? So on this bond, we have one condition right here. So what is the one condition? You could pay debt, pay principal, pay debt before maturity date. Okay? So for the callable bond, not only for basic promises, also you have this condition. This condition tell you you have the right. What kind of right? Pay the debt before maturity date. Okay? Any questions? Hi, superstars. Both of you waiting for me to call your name, right? Any questions? No? Okay. But you should understand. For investors, they want you to do that. Pay the money back before maturity. For investors, do they want you to do that? Of course they don't want. Why? You pay the money back before maturity. Investor lost what? Interest, right? So, nothing for free. For investors, they don't want to lose their interest. So that's why they allow you to do that. They will give you their requirement. So what's their requirement? On the same day, they will tell you, okay, if you want to do that, you should pay how much to buy back the bond. So on the same day, they will tell you redemption price 可赎回价格. So what's the redemption price 可赎回价格? How much money you had to pay in order to buy back the bond earlier. So in order to do that, investor will tell you redemption price. 赎回价格. So what does it mean? Redemption price 赎回价格. How much money you had to pay in order to buy back the bond? Okay? So callable bond not only for basic promises, also will tell you what is redemption price. How much money you had to pay in order to buy back the bond, pay the debt earlier, okay? Because they sacrifice interest, so they ask you to pay more money, okay? Makes sense, right? Otherwise, who want to lose the business, who want to get the loss? No one. So they cannot get the interest, so they require you redemption price. How much money you have to pay, okay? Any questions? So this is callable bond. After you issue that, you could pay the money back before maturity date. Any questions? Okay. So what do you think? What kind of situation you want to do that? Pay the debt before maturity date. For you, why you want to pay the debt before maturity date? Simple case is what? You have the money, right? Simple case, I have enough money. I don't know how to spend my money because I'm too rich, right? So I'm too rich. Oh, I have too many houses, too many cars. I have too many assets already, but still I have extra money. I don't know how to spend it. So what should we do? Okay, I pay the debt. Okay, so when you have enough money, extra money, you don't know where to spend your money. Okay, I pay the money for debt. Then at least I don't need to pay the interest, and that will make my liability decrease. Okay, so this is very, very simple situation. When you have enough money, you don't know where to spend your money, right? For finance, you know, even though you have the money, it's not necessary you pay the debt, right? I have a money for any company. Could you find out any company they don't have a liability? Could you tell me any company they don't have a liability? Could you find out any company they don't have a liability? Impossible. Why? Do you think Apple don't have the money? Of course, Apple has the money, right? But they will use the money on higher reward projects, right? So even though today I have the money, I will spend the money to do some investment with a higher rate of return, right? Instead of paying the debt. Do you understand? So that's why for you, future, you will take many different finance courses. Different finance courses not only tell you pay the debt, they will tell you how to use your money, okay? So here is the simple case. Okay, I have money. I don't know how to do any investment, so I pay the debt. But what if, another case, you don't have the money, but still you pay the money before maturity date? Could you tell me what kind of situation? Another case, this case is when you have the money, right? So this is the most simple case. So what's your most simple case? You have the money, okay? So you have extra cash. So you decide to pay the debt. But what if another case? So what's another case? You don't have extra cash. So could you tell me, when you don't have extra cash, I don't have the money, but still today, I pay the debt before maturity date. How? Anyone? Today, I don't have extra cash, but still, I pay the debt earlier because today I issue the new bond to pay the old bond. Do you understand? So this case is when you issue the new bond. To pay old bond. 举新债还旧债。Still, that's quite common for finance. So could you tell me, when you issue the new bond to pay the old bond, today, market interest rate increase or decrease? Today, the market interest rate is higher or lower than before? Lower or higher? Sean, lower or higher? Today, market interest rate is higher or lower? Do you know my question? Do you know what does it mean, market interest rate? Cost of borrowing, 借贷成本. So what does it mean? Market interest rate 市场利率借钱的代价。So when you want to do that, issue the new bond to pay the old bond. It means your cost of borrowing is lower or higher today. Should be? Huh? J, lower or higher? Should be? 你想想，你现在要借钱，你要借钱代价要比较多还比较低？啊？啊？Market interest rate today should be lower than before. Okay? So it means what? Your new bond. Your market interest rate should be lower than before. Maybe 8%. But your old bond, for example, market rate 10%. Do you understand? What does it mean? So maybe you don't have the money, but still today you will pay the old bond earlier before maturity date. Why? Because you find out today market interest rate lower. Market interest rate lower means what? Interest you had to pay only 8%. So 8% lower than 10%, right? So will you do that? Of course. Sean, do you understand? 听得懂吗？通常举新债还旧债代表什么意思？我现在没有钱，我没有钱的情况之下，我还是想办法要把我的旧债、我的钱还掉。为什么 ？Market rate 不就是借贷成本、借钱的代价吗？当初发行的时候 ，old bond 当初发行市场利率10%，市场利率10%表示你借钱的代价多少？10%啊，所以你要还的利率是10%哦。现在如果市场利率降低了，我现在发行新债 ，issue day， 我现在发行新债，新债现在市场利率8%，所以你借钱代价是多少？8%啊。那我现在是不是现在我假设欠100万，我2年前欠100万，市场利率10%，利息你要给10%，我现在是不是借100万？我只要8%，然后去把旧债100万还掉了。总结起来看，你要付的借贷成本多少？不就从10% 变8% 吗？所以你要还的利息不就变少了吗？那你会不会这么做？会啊，懂意思吗？所以市场利率降低就是借钱的代价变低，借钱的代价变低就是你该做什么事的时候，借钱的时候嘛。OK， so this one you're crazy or I'll crazy I'll be crazy. So second one, more complicated, also more common for your finance world. You don't have the money, but still you will do these kind of things because you want to reduce your cost of borrowing. Okay? Any questions? No problem? Okay. So since you understand why we pay the money before maturity date, then we will look at some cases to let you understand it, how to deal with this kind of situation. Okay? So, since you understand that, we still want to know this business is your gain or loss, right? How to figure out is your gain or your loss? On your slide 165. Remember, when we talk about PPE, when you understand PPE, you understand liabilities, the same structure. So for PPE, what should we do? First issue, find out what's your cost, 1 plus 2, right? After that, we use the PPE. Your PPE's function, efficiency, value decrease, right? So what should we do? Depreciation. After we do the depreciation, we could find out your PP's book value. right? So PP's book value, how much? After we do the depreciation. So what does it mean? Your PP's book value means what? Your PP's value on your accounting books. Okay? After you understand your PP's value on your accounting books, then last day we sell it, right? So you sell it, you will get the selling price. So selling price is how much money you can get when you sell your PPE, right? Okay? So market value selling price is when you sell it, how much money you can get. So you get, for example, the cash. So for this business, you should understand it's your gain or loss, right? So it's your gain or your loss. You have to compare book value and market value to understand the transaction is your gain or your loss, right? So for example, your book value is 100. For example, you got the cash 80. So what does it mean? On your accounting book told you your PP's value $100, but for $100 PPE, you sell it, only get cash 80. So this transaction is your loss $20, right? Okay. So I know for this transaction is my loss $20. Okay. So what does it mean? PP's value 100 and sell it with a low price. So it's my loss $20. So for this case, you sold PPE with low price. So this is your loss. Okay? So any transaction you want to know that's your gain or your loss, you should compare book value and market value. Okay? If you understand the structure, then we go to liability, the same. So for liability, bonds, first issue, figure out how much money you could borrow, right? How much money you could borrow means what? That's your liabilities, okay? So based on these, I could find out how much money you could borrow also means the amount you owed, right? Okay? Based on the liabilities, the amount we owed. Don't forget, the following periods, we should find out our interest, right? So we use effective interest method, 有效利率法, to find out our first cost of borrowing and second cost of borrowing, right? Okay. So our effective interest method, 有效利率法. This one could help you find out your first cost of borrowing. And your second cost of borrowing. Remember that? So the following period, we should use effective interest method, 有效利率法, to find out our second cost of borrowing. And also, don't forget, at the beginning, I remind you that second cost of borrowing will what? Affect your book value, right? Your second cost of borrowing will affect your liabilities book value. In case you forgot, you can look at your tables right here. Did you find out? Your second cost of borrowing will what? Will affect your liabilities book value, okay? So don't forget, your second cost of borrowing will affect your liabilities book value. Why? Because today we want to find out, you have to compute your liabilities book value by yourself. So you should know how to compute to get your liabilities book value, okay, based on second cost of borrowing, okay? So right here, after we find out second cost of borrowing, don't forget, second cost of borrowing will affect your liabilities book value, right? So if discount you will make your book value increase over periods. If premium, your second cost of borrowing will make your book value decrease over periods. Okay? So when you try to get your liabilities book value, you should focus on your second cost of borrowing will make your liability increase or decrease. Okay? So only after you consider second cost of borrowing to get your book value, okay, then you will note your liabilities on your accounting books. After you got the book value, then next you could compare with the market value to know is your gain or your loss, okay? So after that, you will get the book value. So what does it mean, book value? Your liability on accounting books. Any questions? After you understand your liability on accounting books, then compare with market value, redemption price. What does it mean? Redemption price, market value. How much money you pay, right, for the debt. Redemption price, 赎回价格. So the cash you paid for debt. Okay, any questions? So you can combine these two. Okay, I have a liability, but I pay how much? Compare together, you know this is your gain or your loss. Any questions? Okay, take a break. Any question, please come to ask.